L in the alphabet, so I was directionally correct. But now we're going to go backwards down the number line to quote Fish. Christina Partsinevelos, Intel. Did I get that right? Is it?
All right, we are live. We're looking at earnings today. Three things. Let's go live on Instagram. Three things that really move markets here. Earnings growth, right? That's what we're looking for. More earnings growth. Liquidity from the central banks, from the financial system, and the economic system starting to turn up. Those are the three things that really move markets. Evidence for all three of those. So we're looking at big tech earnings. So far, earnings growth has been pretty good. But you know what? Let's go ahead and throw in the intro here. We are live. Okay, we're live. Just want to make sure we're live everywhere. And then I'll switch to the charts. I'll switch to the charts. All right, let's get started. Okay, yeah, we're looking at earnings. So we should have Microsoft and Google coming in right now. So I'm going to leave this up for the YouTube. I'm going to leave it on there. I'll go ahead and turn on the sound in a second. All right, closing bell. But so far, yeah, we got S&P climbing up into the second half of the day. Right? So let's take a look at the charts, what we got setting up here so far. Right, and then I have multiple screens here because we got a lot going on. S&P 500 top left-hand corner. We're starting to recover here. Now, if we do go back onto the bigger chart really quick, see where we're coming from. Hey, Tesla's looking pretty good too also. But let's look at the S&P. What are we looking at here? We've had a giant pullback. Okay, no, it's not giant. It's actually a regular correction, 5% correction. Let's go ahead and measure it out there. Let's go from the top. We came down about 5.7%. Okay, not too bad. A really good correction. We could go 10%. I don't know. We don't know because earnings are starting to look good, right? Earnings are starting to look pretty good here. And if you go back to last year, the expectation for markets is that the second quarter would be the worst earnings growth. So we're looking at guidance here. When we hear the earnings, we're going to be looking for guidance. And if the guidance comes in better than expected, right? If the guidance comes in better than expected, well, you're going to get a vicious rally to the upside because the market is expecting the weakest earnings. It's forward looking, which is why we have, let me move this to the side, which is why we had Tesla bounce, right? Why did we have Tesla bounce? That's not Tesla. Why do we have Tesla rip higher? Because it priced in, and look at markets are very efficient. It prices in the weakness and all the bad news beforehand. That when the facts come out, right? Buy the rumor, sell the fact. When the facts actually come out, they are creating the Model 2. Now, Tesla's starting to break out of that gigantic downwards pattern. Okay, forgive me, I'm trying to do two things at once here. Microsoft results out. All right, we're going to switch over to earnings, but the whole point is we'll go over the earnings that the market is looking to rip off these earnings, especially if we get a better than expected CPI report. Okay, let me go back 10 seconds. We're going to throw on the earnings here. All right, make sure we can see it on all platforms pretty clearly. And then we will adjust. We'll talk about the earnings. Let's flip back over. How you guys doing today? See you in the comments. What up? Yeah, let's go over this. Okay. So we got Microsoft and Google. We'll talk about Tesla. We'll talk about the other earnings in the market that we've had so far. But for now, let's listen into what we got.
Nicole, we've got Microsoft. I'm going to cut you off right there so we can get those results and come back. Steve Kovac has the numbers. Steve.
Hey, Morgan. Yeah, and it's a beat on the top and bottom lines and a beat on Azure revenue growth. Let me go over the numbers here. EPS is coming in at $2.94. Street was looking for $2.82. Revenues were $61.9 billion. Street was looking for $60.8 billion. And then Azure continues its reacceleration here. It's a 31% growth. Street was looking for 28.6% growth. I'm going to go through the numbers here in a minute and see how much of that Azure growth they're attributing to AI. I'll be right back with you, but that's the numbers we got for now. Stock's up a little more than 5%, guys.
All right, Nicole, I'm going to go back to you now that we got those initial numbers from Microsoft, and the stock is up 5% right now.
And actually, that was the great segue into what I was saying, which was what we saw out of Netflix, what we saw out of Meta. When stocks don't ramp up on good news, there's generally a risk change in risk appetite. And instead, here you see a beat from Microsoft, and the risk appetite is being absorbed.
Okay, so Microsoft's going up. All right, so let's kind of put this in a context a little bit. Let me get back to these charts. Let's throw this in context. And let's look at the chart really quick. Let's see what we got going on for Microsoft. Here we go, bottom right hand corner. Whoa, big move. So you have a lot of different reactions going on. Meta beat goes down. I think Meta just moved up too quickly, right? They're pricing in a lot of Meta was pricing in very good earnings report, and they crushed earnings. So far, big tech is crushing earnings. Keep that in mind. This rally will start to materialize underneath the hood. Growth is accelerating, whether it's government spending or not. Growth is reaccelerating. Okay. The only big only big bump in the road so far is inflation expectations. That's about it. Inflation expectations coming back down, but for the most part, we're getting a lot of the big tech earnings crushing. And Tesla missed, but Tesla's not really a big part of the Max 7 anymore, right? Because they have their own issues. If you look at Google, Apple, Amazon, which we will get their earnings later, they're all beating, and the stocks either move higher into those earnings, right? Or they consolidate a little bit. So if we go back in time and we just got, what do we got? Some more. Oh, that's Intel. Okay. We don't care about Intel so far. Intel beat expectations. So if we go back to the rest of the week to, just to show some evidence here, what do we got going on here? Let's look at this. Okay. Let's look what we're beating, how we're beating so far. I'm going to go through the big companies here. Make sure I can see this clearly. All right. So Monday, right? And this is, the next 2 weeks are really the brunt of earnings. And why is that important? Because the market is forward looking. So it wants to see the guidance, what's going forward. Are we going to get more growth, right? We see revenue starting to pick up here. Visa, right? Visa is going to be an insight into the consumer. They beat bottom line growth, right? EPS estimates. They did beat the consensus. Revenue also beat. So Visa beat on both sides. Tesla, big miss, but Tesla priced in weakness before anything happened. Also, when we look at Tesla, here's the positives for Tesla. This is why it's really going up. There was a rumor for Tesla that they were going to ditch the Model 2 or the lower price vehicle, which is, going to provide us, not a service, but a good for the biggest class of consumers, right? The biggest class of consumers are usually buying cars around 25,000 to 30,000. So they need a model that is cheaper. They need a cheaper model. There was a bunch of rumors saying that Tesla was not going to create that model, that they're just going to jump into robo-taxis. Not true, right? Also, Tesla reported, or Elon talked about buying back shares. If they do a buyback, that is extremely bullish for Tesla, right? If they do a buyback, they're going to remove shares, create more scarcity, stocks go up. They're going to initially squeeze the shorts. When is that going to happen? We never know. But that, the sentiment or the feeling, the optimism that they buy back shares is huge. Energy storage will eventually be bigger than the vehicle segment. And is that Microsoft? No, we already got that. So the vehicle segment is energy storage will be bigger than vehicles into the future. They're still ramping up. That is accelerating. The revenue there is accelerating. FSD around the corner. We heard that 1,000 times. We don't really know yet when it's coming, but version 12 is different because now the AI is actually integrating itself into the system, into the cars. Instead of coding for use cases, the AI itself inside of the Tesla cars is now starting to adapt and code itself, right? This is probably the best AI in the market, but price action doesn't tell us that, because Tesla always moves up much stronger than expected, and then it moves down stronger than expected. So expect a big move over the next couple months. They have August 8th. They're going to be coming out with the actual robo taxi plan. So we'll see. I think it sells off then, but I think we're going to pull up. Anyways, we're talking a little bit about Tesla. Let's move down. Tesla's sold off, whatever, asymmetric. Pepsi, right? Pepsi, another look into the consumer, strong earnings, they beat revenue. So total income. And then also, not total income, total revenue, total sales. They beat expectations and they beat income. Also, this was interesting. And I know everybody gets pissed about the politics because we have a lot of defense spending, but Raytheon destroying it, right? Lockheed Martin killing it. Why? Because I mean, they're defense contractors, and that's where a lot of government spending is going, and it is, you know, increasing GDP into the economy. GMB, Meta crushed it. Meta crushed top and bottom line earnings. IBM also beat. So all the companies are beating earnings. Boeing beat. Who is this? We got Google. Is this Google? Oh yeah, we got Google. Okay, let's listen into Google here. We're gonna listen into Google. Anyways, everybody is beating earnings. Yeah, it looks like we're crushing earnings so far. And then we got Microsoft beating Alphabet right now. We're gonna see they also beat at the same. They're also beating. All right.
Morgan, that the tech trade is not dead.
All right, let's see what more we can get on Alphabet. Deirdre Bosa has some more. Dee.
Yeah, John, this is big news. Alphabet announcing its first ever dividend of 20 cents per share.
Uh-oh.
You could say maybe this was long in the coming, especially after Meta issued a dividend earlier this year that raised expectations. But here we have it, Google's first ever dividend, has a buyback program.
Yo, that is huge. Really quick, somebody asked Badfish, Meta tanked on guidance. Meta tanked, and it'll recover, but Meta tanked, just so you know, because of their CapEx. They're increasing capital expenditures, so they're going to use a lot of the free cash flow to invest in AI. And the market did not want to see you spending more cash on something that is uncertain. That's why it tanked. It'll recover. They're spending a lot, though, on AI. But again, Meta has a lot of cash on the side because they have a lot of advertisement. Now, this is huge for Google. Google and Microsoft are starting to boom right now. Right, that's going to bring S&P up tomorrow. This is why I'm not trading iron condors, not doing no options, just sitting it out because the market's going to move quickly in one direction. This might set us up. Friday, tomorrow is GDP. I'm sorry, not GDP, PCE from the Fed. If PCE comes in flat, which I think it is, I'm going to tell you why. The market's going to continue. This correction might be over. This correction might be over. Maybe a little more consolidation. We'll see. But if PCE comes out pretty good, I think the correction's over. Also, GDP today, and I'm just going over this real quickly. GDP today was down. What does that tell us? If GDP is down, expectations of inflation are going to be down, right? Very bullish for the market. We want growth to slow a bit into the next coming months. April, May, and then June, we start to pick up again. Nice correction, right in line with seasonality. Okay, now you got Google. Google has to figure out a way to keep shareholders in the game. And what are they doing? Increasing they're starting a dividend. That's what she just announced. I'll listen a little more into it. This is huge, a dividend. So now they're turning from growth to, like Apple, sustainability. Right now they got to maintain their growth, where you have other companies like Tesla who are still in early stage growth. That's why I'm more bullish on Tesla. But either way, this is a cash cow. Google with the dividend. Wow, that's big news for investors who already hold the stock. And if they buy back shares, it's going up a lot higher.
In place for years, but a dividend is something that Wall Street has been looking for. So shares are up even more now, more than 13%.
Wow, look at those big tech stocks, all grown up. Dividends from Meta
Exactly.
and now
I
for Alphabet
actually.
as well. Yeah, going back to Steve Kovac, are we on Microsoft? Steve, what's going on with Microsoft?
Hey there, John. Yeah, I wanted to talk a little bit more about this Azure growth and specifically the amount that Microsoft says AI is contributing to it. So they say 7 percentage points of that 31% of the growth they saw is coming from AI. So as you know, John, a lot of the open AI activity and other AI activity running in the cloud, that directly benefits the cloud business. And it's an increase quarter over quarter of the share that AI is making up of that growth. It was 6 points last quarter in the December quarter, and now it's 7 points. So a growing part of the Azure growth is all due to AI. John.
7 points due to AI here in this growth, you say. Interesting. Kevin.
And that is productivity growth right there. They're becoming more efficient with AI, right? Artificial intelligence is just a bubble. We're at the beginning of the bubble. The bubble hasn't even started yet. We're in like 96, 95 of the early 2000s .com tech bubble, right? We still got a lot of time before the bubble really starts to reaccelerate. Very bullish on the market. Now earnings are coming in to match, right? To match the GDP growth. And earnings are looking forward, or actually forward-looking GDP, right? And GDP in general has been driven a lot by debt growth and population coming down and government spending. But the S&P 500, stocks, companies, assets, they're going to capitalize however they can. where, you know, the economy might be slow in the next couple of months, but stocks are going to go higher because they know yields are coming down. Now the cost to borrow, the cost to grow your capital, the cost to grow your company is coming down. So I know that's kind of quick. Point being here, this is very bullish. Microsoft, Microsoft, Google crushing earnings, Meta crushing earnings. Now Google with the dividend, and now the S&P is probably going much higher tomorrow. And we got to wait for Nvidia. Nvidia is going to be the big one, but I think, you know, things are looking very promising for the second half of the year for seasonality. Let me listen up to a little more things they're saying. So AI is also creating productivity. What does that do going forward? It reduces the amount of inflation, or it caps inflation. It caps inflation. Better productivity, better efficiency growth caps inflation. This is why I'm so bullish, because if inflation stops where it's at, 3.3, 3.5, right, the Fed can cut rates, and they're probably going to cut anyway, and we reaccelerate. Okay, they're going to start increasing liquidity into the market again, more cash, more credit. Here it comes, because the earnings, the growing is not actually going to ramp up inflation.
I want to go back to you on that, because you were talking about expectations that Microsoft's going to do well because of AI. I wonder if this puts.
All right, we don't need to listen to all this. We'll go back to the charts here. Take a look at what we're seeing. Let's take a look at the charts on what we are seeing here, and then I'll switch this up. So Microsoft, we'll look at me move this over. You also have Tesla really breaking out. If you guys weren't paying attention, Tesla's really starting to break out. So the bottom half here is, let me straighten this up, is going to be Google, and then at the top we have Microsoft. They still have their earnings call, but these are very mature companies, and all they want to see is a beat. And, you know, what is your guidance looking like? So this is a big move. S&P is moving up. Now the S&P should be, we're at what, 507. Let's go back to the big chart, see where we're at with SPY. 507, because I don't have after hours in here, so I can't see it. But 507 so far puts us at the resistance level. Puts us right here at resistance, 507. Right? If we open up above this, we're going to have a pretty nice rally here. Next resistance for S&P is going to be 515. Okay. 515 for SPY anyways. And yeah, we have that anchored VWAP if we get above this anchored VWAP. So my expectation is we do gap up. Let's see if we get above anchored. Oh, why can't I draw this? No, that's not the anchor. My bad. Let's go here. All right. So if we do get above this anchored VWAP, I want to see a support anchored VWAP and then go retest, right? And this is going to be the real test here. 515, 516. Can we get above that level, right? And I think that's going to depend on tomorrow how PCE comes in. How does PCE come in? Is you know, the Fed's preferred inflation gauge going to be down? So earnings are looking good, right? That's the main point here. I wanted to point out big tech earnings are looking good. Nvidia earnings are going to be good. So far, the market is going to run off these, or not run off, but the market is going to increase because earnings growth is increasing. PEs are falling, right? Now, the thing that drives us next is going to be the macro. And I know everybody's worried about inflation here, but you know, just keep in mind that inflation is a very lagging indicator. Okay. Inflation is a very no, we're not looking at that. Inflation's lagging, and the forward-looking indicators. Oh, there we go. GDP. So this is inflation. I know they say, oh, it's been up for 3 months in a row. Not really. Not really. Right? We had this down month in December. This was the January report. It was really hot, but it reflects, it does reflect December. Okay. And boom, inflation came down. We've had 1-2 months of, you know, CPI accelerating, but it's not really breaking the level, right? Your highest level for the last 6 months, last 9 months is about 3.7. So unless we get above 3.7, we're not going anywhere. So with good earnings, and you're hearing, at least from the big tech, that the earnings growth is deflationary. Okay, deflationary. Prices are not rising for them. Supply chain prices are coming down. That's another key for Tesla also. Their prices of batteries are also coming down. The price of doing business is coming down for Tesla. Okay, so they can keep cutting prices. The narrative is going to come together. But, you know, supply chains, this is supply chain prices for the service sector of the economy. Those came down drastically, big drop in supply chain prices. This leads CPI, right? You can see it peaked out. If we go to the up cycle, we peaked out here, and then CPI peaked later. It has about a 3-month lead. So when supply chain prices start to come down, eventually you're going to get consumer prices, which is CPI, start to come down. Right. So this big, you know, this big move to the downside hasn't really came in yet, and it's going to play itself out. Now, with this earnings growth picking up in the market, I'm telling you, we're going to see a vicious rally. Does it start tomorrow? I don't know. It depends on PCE. We might have to wait another month. April, May. I think the bottom is going to be in May. What? Okay. Not sure what that means. Anyways, sorry, I got a little message on TikTok. TikTok's always kind of weird. The Fed is fine with 3.5% inflation. 2% will be achieved in 2026. Possible. Chris Waters. Yeah, I agree. We probably, the Fed is fine with 3.5. They don't really care because they're seeing deflationary forces come into play. A lot of inflation people think is spending, right? Yes, it is government spending to some degree, but it's also a lot of that. A lot of CPI or a lot of this big move in CPI going up with supply chains being constrained. You're not able to push through products. You're not able to push through goods. Shipping is constrained. So what do? They pull prices up in order to sell the same amount of goods. If you're a company, if you're a business, and you usually sell 10 coffees, right, for example, and then all of a sudden you can only sell 5 because you're not getting all the products you need, what are you going to do? You're going to double your prices to make sure you still meet your budget, right? To still meet your budget. You can't sell 5 because you're gonna miss your profits. So what do? They increase prices. Now that those supply chains are starting to heal, right? ISM, look at the ISM. Now that those supply chains prices are healing, I mean, not prices, but supply chains are healing, inflation's coming down. And they're only getting better. Supply chains are starting to get better. Now, the reason we had that pop in inflation, and when you look at the whole picture, it's not even that bad. The reason you had this big pop was geopolitical instability, right? In the Middle East, the Red Sea conflict, what did it do? It slowed down shipping. When you slow down shipping, prices go up a little bit because the supply chains are clogged up again. So as long as we get the supply chains healthy, I see CPI coming down this summer. I think we're really going to start to accelerate. And this is a year over year metric also. So it's looking at the previous year. And if the previous year was making progress, it's going to be harder to see the now inflation come down. But once it flattens out, once you get the year over year flatten out, which is July, that means you're measuring versus, this is confusing. You're measuring versus the previous year where inflation wasn't moving. So we're going to get progress. So July, June, this summer should have I think the rally starts this summer, June. We bottom in May. June, we'll see. June will probably be a recovery. And then July, we start to really break out because inflation's done. Inflation is done unless you get a Red Sea conflict, and a lot of people are betting on that. I don't think it happens. So we're looking at that. Inflation is coming down. Forward-looking expectations are down. Earnings are up. And if we look at other stuff like liquidity, right? If we look at liquidity, this is the Fed printing of money, the macro. The Fed is just going to keep printing. Does it look? I mean, it's not like they're just printing money out of thin air, but they have to make sure that the financial system is healthy. That's what they do. They're funding the economics. They're funding the government to some degree, and liquidity is only going to go up from here, right? And that's going to fuel asset prices. That will fuel asset prices. So liquidity is going up, and you can see how much it matches with the S&P. As liquidity bottomed, the S&P went higher. And then you have global liquidity too. From who is it? Global liquidity is going to be China, Europe. Europe's about to cut rates. You cut interest rates. What do? When you cut interest rates, you basically give more money into the system. So we should be seeing global liquidity also pick up. I think it's all going to come this June, this July. That's what the Fed's been talking about. Okay. And when we throw on the economic cycle, right? Now we have earnings picking up. Wow, that's interesting. So inflation, as we get inflation come down, you're going to have earnings start to pick up even more so because now the producer prices for producers are coming down. And now you have the macro cycle come into play, right? You really have the macro cycle come into play, right? And what does that look like? Well, it's pretty simple. You have 1 quarter or 1 quarter of the, 1 quarter of the year. You have your second quarter of the year, and then you have third, and then you have the fourth. So these are all cycles right here, up, down, 4 cycles, 1, 2, 3, 4 seasons. And again, we had that last time go up. We peaked, we came down, we bottomed. We're barely in the early innings. We're in the early innings of an economic acceleration, right? I don't know where else to find this information because a lot of people just look at one or two data points, but the economic cycle is starting to pick up. So we're in early cycle recovery still. The manufacturing is it. Productivity is picking up. So we're in early cycle. and the only bump in the road is inflation. But we can see forward-looking inflation is coming down, so not too concerned about that, right? And then here's the Fed interest rates and the bond yields. This is also a headwind right now for us if we switch over to bond yields. So look, S&P is going to bounce here. Let's actually do a little bit of technicals. Let's take a look at what we're seeing here. SPX, go to SPX. We're in Q2. So we have the Q2 normal pullback as usual. Q2 pullback. Move the screen a little bit. All right. And we are testing, we tested that anchored VWAP from the beginning of the year. Anchored VWAP just takes the volume average from the beginning of the year. And yeah, we got a little overextended. We came back. We slipped below it a little bit, but now we're starting to hold that anchored VWAP. And we're getting tight here, right? Earnings should get us above this anchored VWAP from the big, not sell off, but from an impulse, selling impulse that happened. What is this? April 4th, right? When we broke the trend, we broke the uptrend, we went into a downtrend, but I don't even think the downtrend has started yet, right? Now, if earnings are this good, we're not really going to get a downtrend. We should be seeing an uptrend, or we should see a consolidation at these levels. The only thing that takes us lower as a whole is, a really bad PCE report, which we might get. It might not be that great, but so far we might be looking at this. Okay, just some sideways action. We'll see. This is what we're looking at right here. Maybe sideways for a while. Okay, within that range, Q1, Q2 earnings. Now the market sold off ahead of Q2 earnings and should be revving back up. Would you say here? Breath is starting to show some signs of recovery according to, oh yeah, we'll take a look at that. So we'll look at breath. We'll see if breath is starting to recover also. But yeah, I think we're going to recover. Earnings are looking good. So you have earnings in the picture. You have earnings picking up. You have the economic cycle picking up. You have, and then you have, actually, the macro forces are a little tough on us because rates are up. This is the only thing holding back the market at the moment. Okay. If it comes down, supportive. If it goes up, very restrictive. So these are, bond rates. This is the market interest rates. And if those interest rates are climbing, then it's going to hold back the market. But what do we have today? GDP came out weaker than expected. Let's take a look at that GDP really quick. There it is. All right, so we did have GDP come in weaker, which this really confused me when it came to the market because we should have seen yields actually come down today. Let's go back to the daily chart. We should have seen bond yields actually come down, and they try to break out. Maybe this is it. This is the peak. I think the bond market is probably going to look for PCE tomorrow, so we make sure we're not in stagflation. But let's go ahead and jump over to those. Now, tomorrow, if you guys look at tomorrow is going to be the biggest macro trade. That's what I'm going to talk about tomorrow. In this cycle, what is the biggest macro trade we're looking at? And, breaking news, it's crypto. Breaking news, it is crypto. So we're going to go over all the elements, all the variables that are fueling the big crypto cycle. But anyways, growth rate today, look at the growth rate coming down, right? So if the growth rate is coming down, then bond yields should start to pick up as long as inflation is now coming down with it. So GDP Q3, very strong. That surprised the market. And now GDP is coming down, but it's not negative, right? 1.6 is the estimate for Q1. And Q2 is probably going to be kind of flat. But Q2 is going to look forward to Q3, which should be really strong because now the Fed is going to be looking to cut rates. Consumers should be slowing down anyway, right? Consumers should be slowing down anyway because there's nothing to spend on in April. In May. June is where you start to get the spending come back into the economy. Defense spending is still up, right? We're still going to see defense spending. We're still going to see CapEx from a lot of businesses and companies. They're still going to be spending for that. But tomorrow, this is the big number. This is what we're looking at. Personal consumption expenditure. And then you have, actually, this is going to be a good reading. We had a big reading for consumers last month. They beat expectations for spending. So if it comes down, yields comes down, and the market continues to chug higher. But I'm looking for this one. Okay. I'm looking for this. What do we got? PCE 2.5%. Yeah. So Fed is already at 2.5, right? Fed inflation, PCE, personal consumption. And even though CPI accelerated, one thing you want to keep in mind here is that the reason why I'm bullish, or the reason why I think inflation, Fed inflation is coming down and the Fed still cuts rates this summer maybe they push it out a little further. I think, it depends on the data we get, is because it's not looking at so much shelter. Shelter is 40%. Keep this in mind. Shelter is 40% of inflation on CPI, right? And shelter's still moving up a little bit, but when it comes to PCE, which the Fed is, this is the key for the Fed. When it comes to PCE, shelter is only 20%. It's half the weight, which means we should not see a material reacceleration in PCE. Maybe this next month it goes up a little bit, but most of inflation is insurance. Look at your auto insurance. It's auto insurance and it's shelter. Everything else is lower. Energy, lower. Food, lower. Right. And I'm not talking about your prices. I'm talking about the rate in your prices. Rents are lower. Rents are definitely falling. It's the dang shelter inflation outside of rents. It's very laggy, right? Service inflation is up a little bit, but all this service stuff, all this service crap that's moving up is mostly auto insurance. Auto insurance still reaccelerating. That is an issue, but it's not the biggest issue. That's not the biggest basket of CPI. That's just one basket that's really coming into play. Where's food at? Watch, we'll look at food inflation. Food inflation's been coming down pretty steady. So food is down. And where's energy at? Energy is another big one. But yeah, energy and food's down. Now I'm not talking about gasoline prices in general. Just energy as a whole is definitely down. All right, there it is. Energy. We might have had a bump. Yeah, we did have a bump go high. Yeah, we had a bump up. But yeah, energy still, it came down significantly. We just need all this stuff to come through. So forward-looking inflation is going to be the thing that the market is looking forward to. And let me see. We have some more earnings coming in. We'll look at the rest of earnings for this week. Crazy buy on Q's after hours, hit imbalance, user one. Okay. Yeah, we're looking good. Let's go back to that market breadth. Market breadth still increasing. It should keep increasing from here. So rates up. Oops, let me take this off. So yeah, rates are up significantly. Right? That is significant. I think rates are trying to make sure there's no stagflation. And this is going to be a headwind, but once it rolls over and comes back into trend or slows down, this means people are buying more bonds at protection for some type of recession or GDP slowdown. Should have came down, didn't happen today. But as this comes down, it's going to fuel the market again. It'll fuel the market again. So the market is running into some headwinds. Now look at the dollar really quick before we get to that. The dollar becomes a tailwind as it comes down. As long as the dollar moves sideways, it becomes a headwind, then a tailwind, headwind, tailwind. Now we're looking at a tailwind, right? We're looking at a tailwind. So as it makes its way down, that is fueling the market up. That's a tailwind. The wind is at your back for the market. Okay. Especially crypto with all the narratives coming in for crypto. So we have that. Also, oil never broke out. Now, hey, it can still break out, but the geopolitical scare didn't happen. This green box is basically the summer demand, right? If we get this, once we head into summer demand, if oil doesn't break out here, then I expect it to roll over because this is your peak demand, right? And markets are forward looking. So we should see the market actually break out if it's going to break out anytime soon here as we go into the summer peak. Now, wherever summer is, that's it. That's the end of oil. Oil's not going higher, in the middle of the summer. It's going to go higher before the summer or going into the summer. And then it rolls over because your peak demand is done. So summer months, we want to see what it looks like when we come into the summer months. Do we get to 100 or do we stay where we're at? Now the U.S. is the biggest producer of oil. So, we're going to keep pumping. And that's why I kind of doubt that we see any kind of weakness unless there's a geopolitical threat. Looking at market internals. No, that's industrials. If we go to internals, this is going to be, oh, yeah, we got some nice breadth. Let's take this to the regular chart. All right. So how many stocks are moving above their 50-day moving average? So basic performance of the stock market, S&P 500 companies. We got up to a peak in April 1st. We came up to 84% of stocks moving above their 50-day moving average. We bottomed out about 29%. So we fell below the 50 mark. Now we're starting to rise again. And, with the earnings coming in pretty strong, I expect this to continue to rise. And so we just need you're going to need a very bad PCE report and inflation going forward. And I don't know, forward looking inflation looks to be leveling out. Maybe it sticks around 3.5%, but it's not going to reaccelerate to 4 or 5%. It's not going to be the 70s inflation, because in the 70s, the US was not the biggest supplier of oil, right? In the 70s, OPEC could control the oil. If there was a war and OPEC used oil as a weapon, that's what that's not happening today, right? Guyana is pumping a lot of oil. So it's just not the same market structure. I don't expect an energy. It'll be supply chains, if anything, but nothing crazy going on there with supply chains. VIX pretty much peaked out at this point. The VIX is coming down, pretty rapidly after that scare. So this was all geopolitical scare. Didn't play out, right? More posturing. What did I say 2 weeks ago? I think it's more posturing than anything because nobody can afford to really go to war right now. Not right now, anyways. They're still trying to recover. And so the VIX is coming down into earnings, and this might be the move. This might be the move for markets. Put to call ratio. Let's see. This is okay. We don't need to look at that. Yeah, let's go back and look at some technicals. We'll look at a couple companies, how they're looking. Oh, Tesla finished at 170. Okay. Yeah, Tesla's really trying to press that level. Okay, good. Really trying to press that level at this point. Yeah, this is going to be huge if Tesla can break out of this level. This will be pretty explosive if we see it. That RSI is starting to lift again after having a lot of bearish divergence. This took a lot longer than I thought it would, but once we got closer to earnings, I thought, okay, we're just going to need earnings to get by, and you're either going to get a big move down in earnings, and that's the rest of the move or up. So you got market momentum picking up from earnings. You got Tesla already priced in the worst of it. They're going to be buying back shares. They're going to be releasing their robotaxi plan in August. And energy storage is picking up. Yes, the EV market is struggling a little bit, but that's fine. Tesla's still the biggest EV maker in the US, right? Their growth is slowing a bit, maybe sooner than expected, but robo-taxis are going to be the main driver there. And that's not really going to slow the narrative because the narrative is a lot bigger than what we see here. How's advanced decline for S&P? I didn't buy Tesla today. The breakout was not convincing enough. And PC tomorrow put me off. Carbides, I think PC comes in pretty well just because of that whole shelter thing, right? I think if a PC comes in as expected, I think it's bullish for the market. I think it's bullish for the market because PC is going to track inflation a lot more in real time than CPI. I think CPI is a little more lagging because of the shelter component. So if that shelter component is half and it's not factoring in all that, the market does know a lot of inflation is coming from car insurance, right? Maybe it's other premiums, but car insurance, that's going to slow spending. If spending starts to slow down, well, it's going to slow down inflation at the same time. So I actually did buy a couple contracts for Tesla, but I made I caught the bounce and I sold a short contract 2025, and I actually bought a 2025 later contract. And I just want to see what happens here. But I see what you're saying. That breakout wasn't as convincing as it should have been. Let's see what it looked like in the intraday. What did it look like? Looks like it's holding. Got rejected, came back in. It did double top, but it held higher, so I kind of got interested here. And once we started to break out, I think I got in right here. But this was after already catching something else. What up, Jervine? I know it's been a minute. High oil prices at the pump is disinflationary for the things because consumers will be like, oil is so high that I'm not going to purchase this, etc. Yep. I heard this on the compound. Right. Exactly. And I think what Jervine is pointing out here is that the higher oil goes, it's kind of like a correction. Oh, dang, big bounce in oil today. The higher oil goes, it's really if oil spikes. That's your problem, is if oil spikes. And what people don't seem to understand is that markets are forward looking. So if oil does spike, it actually causes a recession. An oil spike might actually cause the Fed to cut rates sooner, because if oil spikes, the cost of energy is going to rise for a lot of companies, right? A lot of industrials, a lot of materials. Their energy costs go up. What do? They start to lay off workers. It cuts into their profits. So they cut workers. Growth starts to slow down, because if if your wages go down, or if you lose your job, you go on unemployment goes up, and next thing you know, the Fed has to cut rates. Now, if it does spike, it's going to cause the market to contract a bit to make sure, hey, is this a real growth shock, or when is the Fed going to cut rates? But either way, you're almost backed into the corner where the market is strong no matter what, right? If it crawls up, well, it's going to be good for energy companies if it just crawls up. And you also have renewable energies. You have other ways of creating energy storage, whatever it is. Tesla's energy storage business is picking up, literally to solve this problem where oil doesn't cause such a disturbance in the market. Because if you can store solar energy, wind energy, whatever it is, water, then or hydro, if you can store that energy, well, oil spikes don't come into play. Oil spikes are not as destructive as they were in the past. So I think people kind of overlook this. It's an oil spike that will cause a correction, not a small crawl up. And the crawl up is going to end in the summertime. We're not going to go full summer and oil just breaks out all the way through the summer. Markets are forward looking. They know this is peak demand. So I think oil starts to peak out in May, in June. I think the highest oil, and I might be wrong, but the highest oil prices might be in June, because the market's going to see the oil demand come in and say, all right, that's it. Right. And you're right, Jervine. It's going to slow down consumers, because consumers have to pay more, especially people who travel a lot. Those who travel a lot, they're going to cut back on other spending, right? For the summertime. Maybe we don't take that trip. Maybe we don't dine out. Maybe we just buy groceries. So oil going higher is actually going to be disinflationary. I do agree with that. The real bad inflation is not really this stuff. It's supply chain inflation. It's supply chain inflation, because supply chains, backing up supply chains is the worst type of inflation. That's what we got in 2022. That was the word. That's why the Fed had to hike rates, and it really didn't even heal inflation. What you need is more production. You need more production. AI is doing that. Companies are starting to become more efficient. That's why this bull market continues, because efficiency is picking up. And we saw that with, we're starting to see that in big tech. And I know big tech isn't everything, but a lot of the industrial stocks, right, that we look at, a lot of the oil producers, they're also becoming more efficient. Every company is becoming more efficient, which means profit margins go up. And we're at the beginning of the business cycle, or we're at least in the early innings. So, we're going to have a monster bull market here. But yeah, I agree with that when it comes to oil. Now, again, our biggest barometer here, our easiest way to see in the future is going to be the dollar, because if the dollar is coming back down, then it's telling us dollars are being invested elsewhere, right? People are not hoarding dollars. They're saying, okay, this looks good. So as earnings season plays itself out in the next, 2 or 3 weeks, really it's the next 2 weeks. Once you have NVIDIA report, that's pretty much the end of big tech earnings. And if the dollar is making its way down, then that means fund managers, investors, people who have been missing the rally, they're going to be taking their cash. They're going to start injecting it back into the market. Obviously, we need better progress on inflation, but I think forward-looking indicators tell us that, progress on inflation is starting to come in. All right. And then also rates. Are we done spiking on rates? I mean, this is slowing us down. But if the market is still climbing with rates going up, that's super bullish, because it tells me that, a lot of investors really don't care. They're saying, hey, 5% rates or 4.8% rates are bad, but earnings growth is picking up even faster. I think earnings growth is at 12% right now, right? So you're still getting, what are you going to do? Go into cash while the business cycle is reaccelerating? I don't think so. I don't think you want to be in cash. All right. So yeah, we got that going on. Anchored VWAP. Let's get back to, actually, no, we'll just do this. I want to see really quick if the earnings are still picking up for Google and Microsoft. Yeah, still holding up for Google and Microsoft. Expect the Qs, was a SPY. Yeah, SPY's up. So here we go, back into the bull market. Right off that anchored VWAP too. Let me get rid of this line. right back into anchored VWAP. And this is our technicals. I mean, if we could continue in the downtrend for the S&P at least, but it's really going to take a bad PC report. So this is our trend, right? This is pretty much, I don't know how you want to, yeah, we'll do it this way. We'll make it tight. We'll make it respect. Yeah, that's our downtrend right there. We might be above this downtrend tomorrow. Not just because of earnings, but the PCE report, if it comes in line, right? I think we cleared this one. So we're looking at this. Can we hold this line? We need to hold this. Yeah, that's our downtrend. We already came down almost 6% on S&P. Is that the 5-week? Let's see where the 5-week momentum is at. We might be coming back into. No, we're not there yet. Okay, 5-week momentum. I think to get bullish, we do need to get above 515. If we get above 515, then that's pretty much a reacceleration. I think it's going to take some time though. I don't think we get there right away this week or next week. I think it's going to take some time because we need bond yields to come down. We need the cost of capital to come down a bit before we see that play out. And then let's see if I have any charts for the manufacturing cycle. See if we're missing anything here. Yeah, a lot of earnings are just coming in pretty solid, so I'm not too worried about that. But some forward, so if we take a look at some forward-looking indicators. Actually, let's look at these. What do we got here? All right, you guys can't see it on TikTok. I'm just going to talk about it. You can short with confidence here. Dimayush, you want to short? Good luck. You're going to need a bad PCE report, which is above expectations. But Shelter is only half the report, so maybe we'll see. We'll see what those PC looks like tomorrow. All right, so is this old? Oh, this is old. What am I doing? This is not the one. My bad. I think I have it on Twitter. There we go. All right. So tomorrow, or for the rest of the month, we have this is starting next week. So so far half of big tech earnings very strong. Now AMD is going to be a big one. AMD looks very ripe to accelerate because the theme of chips is still picking up. So Amazon Tuesday, McDonald's is irrelevant. I'm not too worried about McDonald's and Coca-Cola. You want to see big tech earnings here. Starbucks, you got Starbucks, Amazon, AMD on Tuesday. So Tuesday is going to be big. Monday's not that big. It's going to be Tuesday, and it's going to be MasterCard might be good. eBay. You just want to hear what they say on the earnings report. I just got to see price action. And then you have Apple on Thursday. So it looks like Tuesday, Thursday. Where's the market going to be Tuesday and Thursday? Right? Tuesday and Thursday, where's the market going to be? Or how's it going to react? But yeah, earnings are strong. Earnings are strong so far. And they're only going to get stronger. They're only going to get stronger from here. Why? Because the business cycle is picking up on a global scale, right? The global economic cycle is accelerating, right? So manufacturing picks up, more things are produced, businesses start to increase their profits. And when the manufacturing cycle is accelerating, well, profits continue to accelerate. It plays right into that's why I look at the macro economic cycles, because the economic cycle is going to give me insight into where the stock market is headed. And the stock market is looking at this global cycle starting to pick up, right? And everybody's worried about rates, but the leading, inflation, but the leading indicators for inflation are pointing lower, right? The yellow line is ISM. Well, you don't know what ISM is. The yellow line is prices for supply chains, and those are coming down. CPI is a lag, and the Fed knows that, which is why they're probably still going to cut rates, right? Now, if you look at the LEIs, which are the conference board leading indicators, what everybody wants to look at, those are also re-accelerating. They're starting to pick up. What does that mean? That broadly, if you look at the entire business cycle, right, there's more things going good than bad. They're starting to pick up again. No recession, never happened. I don't think we're going to really get a recession, right? And then in red over there, the bars, that's GDP growth. GDP growth is strong, still positive. And these are all earnings. These are all earnings things, but global earnings growth picking up. This is global equities picking up, right? Global cutting cycle picking up. This one's huge too. If more countries or more, central banks are cutting rates, this is the global cutting cycle. If they're cutting rates, that's a net inflow of money into global markets. That's a net inflow of money. So you have the global cutting cycle picking up, you have the manufacturing cycle picking up, and now earnings growth is picking up, and inflation is set to remain either sticky or lower. Very bullish for markets. I think the biggest thing is going to be Bitcoin. I'm going to do this tomorrow, right? I'm going to do crypto tomorrow because the biggest opportunity I see and all the evidence, I'm going to show that tomorrow. We're going to do this feed tomorrow. So jump on tomorrow for that one. I'll set that up. Would you say, are you invested in? Okay, so let's get back to charts. Let's do some charting though. We'll do a little bit of charts. We'll see what looks pretty good. What's going to hold that narrative? Would you say here, are you invested into long-term retirement ETF combos like VOO? No, I'm not. I'm not interested in that stuff. I just think, I mean, it could be a good product for a lot of people. Let's see, but I'm not really interested in that. I'd rather just, have a different style, but this is VOO. Is this VOO right here? This is Vanguard ETF. What's the difference between SPY, right? SE, maybe it has some type of, oh, that one doesn't look good. Yeah, I'd rather not. I'd rather just, if you're looking for yield, I mean, bonds pay pretty good yield. TLT gives pretty good yield. And bonds are so sold off. I mean, look, the Fed is going to increase liquidity at some point, right? The Fed's going to increase liquidity at some point. That means bonds go higher. So wherever bonds are, they're going to recover. They're coming back. Maybe not back to all-time highs right away, but bonds are going to recover. And once the bond market recovers, and I don't think it happens anytime soon. It might not recover till 2025, right? Mid 2025. Once it recovers, not only is the capital and the collateral going to go higher, so the price, but also you're going to get paid yield on that. And it'll never fail as long as, the US is the superpower in the world. Bonds are not going to fail because the Fed is just going to buy US treasuries. They already, Basel 3 is that Basel 3, the new regulation for banks is that banks can hold an unlimited amount of treasuries. If that is the case, the bond market is going higher. If that is the case, interest rates are not going to continue to spike, at least at the bond level, right? They won't spike. So the market's going to be capped. Yield curve control. This will get capped out. This is really the risk here, is that we break out and make new highs. Do I see it coming? I don't think so. It's just waiting for inflation data, right? This is very restrictive territory. Does it continue? If it goes up here, we're going to have a bigger correction for sure. PI, what is this? Had double earnings estimate and their stock flew yesterday. Who is this? PI? Who's PI? Oh, dang, it did. Okay. No clue who that is. Well, it's just another testament to earnings strength rising, right? Earnings strength is rising. All right, let's go ahead and take a look at some names here. AMD is let's start with the chips. Let's start with the chips here. And we'll start on the weekly chart. Now, big retracement on Nvidia, right? This has been the biggest pullback in Nvidia since the Fed started increasing rates. Any thoughts on Meta? The scoff. You said thoughts on Meta, and then also options. I'm actually doing some iron condors here. I'm going to be doing 1-day iron condors, and I might be doing that we'll see how it goes. I'm trying to build. I want to be doing some content where we look at the iron condors on a daily. But again, I'm still working on some other products for you guys. Taking it slow is possible. Education, long-term education. But yes, iron condors is something that I'm building right now. That'll be on the newsletters in our content on the website. So check out the website. Also, make sure you guys subscribe. Go to my profile, subscribe to the newsletter, because I'm going to release the biggest macro trade this weekend. The biggest macro trade over the next 18 months. Nothing's going to outperform this. And that's that's what I believe based on the evidence I will be showing, right? Biggest macro trade coming in soon. Biggest gains, you got to beat the Fed's balance sheet. You got to beat money printing. You got to beat inflation. If inflation is 4% a year and the Fed is printing at 8% a year, you got to make 12% just to break even, bro. You got to break. Is anything going 12%? Definitely not the SPY, maybe this year, but on average, most assets are not moving at 12% a year. So you want to be in the things that move the most. And then when it's time to exit, I will have an exit strategy that'll be in the free newsletters. So we'll have the exit strategy for you also. Anyways, let's go to the daily. Nvidia had a gigantic pullback. This is probably the opportunity for Nvidia. Now, me personally, I don't really want to look at Nvidia because the pain of missing it was too great, right? Pretty good options here. Falling flag pattern looks good. What I like though to trade better, I think AMD is a better play here. I like AMD. SMCI, another one. Ugly price action. I just don't like the price action. I'm not going to trade this. I'm not going to be looking at this. What up, Doquan? No, I'm just kidding. I see you out there, Jamaica. I don't like this either. AMD looks good though. I definitely like AMD. Okay, AMD, huge retreat. I mean, this was a 30% pullback? That's it. I might pull the trigger this actually tomorrow. It depends on PCE. But AMD had a 35% drawdown. 35%, right? That's the biggest drawdown. That was bigger than this last drawdown. And this was the bear market. So we're not in a bear market. Let's take some of this stuff off. Take some of this off. This is too many things up here. Let's clear it up. Okay. So this was a bear market. This is a bull market. We're in a bull market, and AMD is now presenting an opportunity. It is presenting an opportunity, and this thing can fly because it is in the chip sector, and chips are the underlying mechanism for AI, and that's what everybody's after: productive growth. Everybody's after efficiency. Everybody's after artificial intelligence, and AMD chips increase that efficiency, however they do, right? And gaming and XYZ, blah blah blah. But I definitely like AMD better. So I wouldn't even buy I think you have to buy weakness here, right? Your RSI, your oversold is definitely touching, the oversold. We're definitely in oversold territory. And my guess is AMD starts to bid up after earnings. Now, let's say AMD gets crushed into earnings. For some reason, I don't know what it'd be. It's going to bounce, right? I believe it's going to bounce if it does get crushed, because that's just too big of a pullback. The rubber band's going to pull back. So I'm more interested in buying like a 2025 call into earnings or into more weakness. I want to see more weakness for AMD. Who knows? I want to see more weakness, but I have a feeling it's going to gap up tremendously, especially if PCE is up. Okay. So go to the 30-minute chart. Let's nail this down a little bit. Now we are below that anchored VWAP, so that kind of looks ugly. Right? This was from the last low. We need to get above that. Now, at this point, again, I don't really care. I think the momentum is too strong for NVIDIA. For chips. I think the momentum is too strong. And yeah, you can wait for this to clear. I mean, the smarter move would definitely be wait for a retest or a break and retest of this level right here, which is what, 160? That would be the smarter move. The riskier move is buying weakness. But if you're looking far enough out, if you're looking to 2025, I mean, it's irrelevant. It is really irrelevant. You want to buy weakness and just, let the market play itself out. So AMD is going nowhere. Top chip manufacturer. TSM, right? Another good one. Ooh, we got too much stuff on here. Let's get rid of some of this. Same thing for TSM. I have a feeling this one might be more priced in, though, than AMD. But it's a clear flag pattern here. All right, let's see. Yeah, this is a clear Meta. We'll look at Meta. I know Meta's pulling back pretty far. I think it's going to be a buy the dip opportunity. TSM setting up also really good. Look at that. Look at that falling pattern. It depends where your time's at too. What are you looking at? Are you looking far out? I'm not doing no day trades here. I rather trade iron condors and S&P using Edgeful, using data, right? I'd rather do that. But if you're looking for a swing trade, I mean, we're in swing trading season here. Now we have the pullback. Now we have the correction. So if you want to go long, you want to go long. You do not want to go long swing trading puts. Your probability is going to be very low because there are way more variables that support a strong market than there is a weak market at this point. SPY just has more. Let me see. SPY just has more fees. Oh, okay, so SPY has more fees. The VOO ETF combo seems like a slow, safe way to grow wealth. Carbides, what I'll say here, and you probably agree, I don't know, is that I don't think those ETFs really grow your wealth. And I know that's controversial. I think they protect your wealth. I think they just protect your wealth because if the Fed is printing, they're debasing the dollar, they're debasing the currency, inflation is up. So all it's doing is tracking the debasement of currency. I think that's what these indexes do. They don't really outgrow. The NASDAQ is probably the only index that's actually growing wealth because it has big tech in it, right? But I just don't think I think it protects your wealth, which is great. It's great, right? But I want to protect my wealth. What is this? Dang, this is annoying. I'd rather protect my wealth after the mega cycle. Okay, let's get that clear. I rather protect myself after the mega cycle, not before the mega cycle. I want to capture the mega cycle and then, roll into S&P on some weakness. But for sure, if you're already wealthy, then yes, S&P is great. VOO's great. I think Tesla's buying AMD, right? Tesla is buying AMD Ryzen chips. Okay. I didn't know that. And I know that Tesla made a lot of purchases in NVIDIA this last quarter. So I like AMD. I think AMD, out of all the chips, I like AMD as the best setup. Let's just make that clear. AMD, I think, is the best setup here. And it's a trader stock. There's a lot of short interest. I mean, it's down 30%. AMD, look at that. Once that thing breaks out, it's over. All right. And then what do you got? TSM looks good. ARM, but I'd be more likely to invest in TSM if I'm going to go long chips. I don't want to go, I don't want to go after a bunch of different chips companies. I mean, TSM is down 12%. I rather have AMD, buy low, sell high, right? I want to have AMD. ARM. I don't even believe ARM is legitimate. After this move, I don't think so. I'm not interested in ARM. It could pop back up for sure. But SMCI and ARM, I mean, I don't believe in them. I just don't believe in these companies. Who knows? Once the chip cycle is over, they don't have an edge. In my view, I think they're done. I think go up, but not more than NVIDIA and AMD. On Marvel, yeah, I'm gonna go with AMD for sure. I'm gonna go with AMD. So those are the chips. Now, big data. Okay, if we look at big data, defense contracting, cybersecurity, I definitely love Palantir the most. I'm just stacking shares here, though. I'm not even trading Palantir. I'm just stacking a small amount of shares, nothing big. But I think Palantir can be an NVIDIA into the future. I think it definitely can be. They're gonna broaden out their business, and it is the best pure AI play that's not already inflated in the market, in my view. Most AI plays like Microsoft, it's already $3 trillion, right? So you can protect your wealth, but you're not going to grow it. Palantir is a wealth builder or a wealth grower, right? Not a wealth protector. It's riskier, but the reward is much bigger. Plain and simple, the reward is much bigger for Palantir than these other companies. So I think it has a long way to go here. It's climbing the trend, right? It's just climbing the trend. Couple trades though. Let's see what these other things look like. CrowdStrike probably a buying opportunity. Actually, let's get rid of that. Also, what are we doing? We're supposed to be in the log. No wonder this looks a little wonky. Okay. Log chart. So this might come into the trend. Even if it doesn't, this looks good. This is a strong company. You got some support down here. Here we go. CrowdStrike 275. Probably your support's around 275 for CrowdStrike. Not too interested in it unless it was really down a lot. Zscaler, another cybersecurity play. Again, I don't really care about these plays. These are just cybersecurity trades. This one actually looks good for a pop, right? But you have earnings, what, May 24th. And I'm not sure about their earnings. I really don't. I'm not too sure about the earnings. So I'm not interested. Palo Alto. Not really interested. Now this looks better to me. It filled the gap, gapped up, filled the gap. Probably reverses here. Well, actually, it hasn't filled the gap yet, but it's headed there. Big sell off on Okta. Okay, still in the uptrend. Let's see. Yeah, we're still in the uptrend for Okta. But again, you don't want to miss tomorrow. Okay, mark your calendars for tomorrow. Tomorrow we're going to talk the biggest trade, and I think it outpaces all these other assets, all these other stocks. Adobe, Oracle, Snow, trash. Nah, not interested. Twilio is struggling very badly. This has been in a sideways pattern for a while. I think CRM and Shopify actually catch my interest a little more. We're at anchored VWAP here for CRM. Okay, Shopify. Let's see, what is Shopify? It's climbing the ladder a little bit. Shopify right back into support. Not bad, but I'm not a fan of the price action of these guys. I rather stick with AMD. I don't want to make 20 trades on 20 different stocks. That's ridiculous. You only want to pick the best. This one actually looks pretty good though. CRM, right off support. Okay. What'd you say? So why wouldn't people accumulate TLT right now while rates are high? Wouldn't that be a decent thing to hold for a year or two? Yes. No, there's huge accumulation in TLT actually. Traders are going to move the price action of TLT. So honestly, I would be accumulating. I do have a little bit of TLT. I would be accumulating TLT if I was less risky, right? I would definitely be accumulating TLT if I was less risky, but I'd rather, right? I'd rather play the crypto cycle. And when things move in crypto, they move quickly, and those gains are going to offset anything in TLT right now. Once we get into macro, once we get into the end of the crypto cycle, that's when I'm going to be looking at TLT. We'll see where it's at that point. Who knows? I can't tell the future, but I'll be looking at TLT in the future or at that point. You know what? I'm going to go, hey, move over to YouTube, TikTok. Just go ahead and move to YouTube. I'm going to switch this over to YouTube and finish off there. What is this? Unoriginal. Oh, I see what it is. Okay. Because I showed CNBC. That's funny. Right. Yeah. Switch over to YouTube. There's a link in the bio. Go to my bio and then it'll take you to YouTube. The charts are way cleaner, and subscribe if you can. All right. I'm going to take that off. There we go. Now we don't have to focus on that. So wouldn't you accumulate TLT? That's a good question there. So if we look at TLT, or not TLT, if we look at the rate cycle, and this is a proxy for TLT. All right, so we got the interest rate cycle and we got TLT. Let's switch up the colors a little bit. Let's go blue for bonds. And then what I want to do also is invert this, because the opposite of 10-year yields, which is the blue, if we turn it upside down, is TLT. It's pretty much long bonds, right? It's pretty much long bonds. Now, and let's fix this up. There we go. Let's fit the screen a little better. All right. So what I'm looking for is when the Fed gets closer to actually cutting rates, and who knows, maybe the Fed doesn't cut rates this year. I don't know. I just think the best risk reward is crypto regardless. And once the Fed does start cutting rates, then I might be interested in TLT for the recession play. But I don't really want to switch. You know what I'm saying, Carbides? I don't really want to switch. I think I'm better off if TLT, let's say TLT is consolidating at this level for the next 2 years or the next year, right? Crypto plays out. Bitcoin goes to 150,000. right? I take some profits on Chainlink, whatever. Then I'll be looking to rotate here because I want to see recession indicators. Now, when I say recession indicators, what I want to see is this start to rotate down. So let's bring this up. Here we go. So I'll go ahead and buy TLT possibly when I see the business cycle start to roll over, when I see real weakness. And right now, if this accelerates, if the ISM is starting to accelerate, I don't really want to own TLT. I want to own TLT when the business cycle peaks up here. That's when I want to be interested in TLT. Now, it didn't play out on this, right? Bonds didn't play out well this time because we had massive inflation. We had 50-year high inflation. So, yeah, you couldn't buy TLT, which is why I'm not buying it today, because what if inflation picks back up, right? Stocks can still go higher with rising inflation and growth, and so will crypto, because crypto has other things fueling it, right? Like supply dynamics getting cut in half. Crypto has other drivers. Now, for instance, here, the business cycle peaked out. Okay, this is the last cycle where we did not have inflation. And once the business cycle picked out, and this is messed up too because of the pandemic. But either way, the bond market started to sniff out bearishness. Okay, so let's just remove the Fed. Let's remove the Fed and just look at the bond market and the business cycle. Once you peak, and it's clear that momentum for the economy is starting to roll over. It's clear here. Now the bond market picks up. This is where I'm going to exit crypto and start going into bonds. That's more so what I'll look like. Now you get bonds starting to pick up. If you have a big recession in second half of 2025 or 2026, bonds are going to start to peak out. Now when that recession really starts to accelerate, now I want to get out of bonds and I want to look for the bottom of crypto. Is it simple? No, it sounds easy, but more so if we look at the business cycle again, when the ISM starts to peak out, that's a good time to buy bonds, to buy protection and get paid on that protection. So that's how I look at it. Same thing here, business cycle peaked here, started to come down. Now we don't really know when the peak is because it's a rolling 30 days, right? We get the ISM every 30 days, but there will be other indications of that, and bonds start to pick up again, right? As the ISM rolls over, as economic momentum slows, that's where you get bonds starting to pick up again. So I'll probably do something like that. And of course, I'll hold. Well, I don't want to say of course. The only thing that I might actually hold here and never sell is probably Palantir and Tesla, right? Probably Palantir and Tesla is something I won't trade. I trade Tesla no matter what, but where I just hold the shares into into the future. And I really, because those are wealth growers. If I want to preserve wealth, well, I'll go buy a property. I'll go buy a property. At least it's a hard asset, one hard asset, on the down cycle. But yeah, who knows? Who knows? I just think the best opportunity is definitely crypto at this point in the cycle. So let's go ahead and jump over to crypto, unless we want to see more Tesla. Oh, this is not the chart I wanted to look at. Let's go back to this chart. Okay. So yeah, we got some stuff, big data, digital wallets. You know who else probably does good is Robinhood, right? The adoption is picking up. You want to see Robinhood coming to this trend. This might be a cheap way to expose yourself. This might be a cheap way to expose yourself to Bitcoin is Robinhood, right? As it falls into the uptrend. And I say actually, let me switch sides. The reason I say a cheap way, because MicroStrategy is way too expensive. MicroStrategy is ridiculously expensive. So those call options are not going to be that great. But Robinhood should definitely boom into the crypto cycle. Coinbase, you could do Coinbase also. Coinbase is a little more expensive. I don't like miners at all. I'm not messing with miners because they're exposed to too many other risks. PayPal, still another digital wallet, hasn't made that move yet. We'll see. SoFi, not interested. A lot of people like it, don't care. Banks are doing however. JP Morgan, yeah, we'll see. And then let's go to industrial play. As the government keeps printing Oh yeah, this thing is picking up. Union Pacific. I think this is a railroad, but this thing has a nice trend. This would be a way to. Did they just have earnings? Yeah, they did. This would be a way to hedge against, not really hedge against, but to capitalize on all the infrastructure, right? Whenever you build manufacturing plants and weapons or infrastructure, you're going to need to move those. This is a play on distribution. This is a play on distribution right now. You also have UPS, but UPS is struggling. I don't know. But this is a play on distribution. The distribution economy looks pretty good. Boeing weapons, but Boeing is trash. I just don't. Boeing has too many issues. Lockheed Martin. I don't know why I don't have it up here, but Lockheed Martin is the biggest beneficiary on a revenue basis to government defense spending. Even though the stock looks like trash, I don't really like the stock. It kind of just moves up. Right, this might be a good hedge. It just moves up. It's defense spending. That ain't going anywhere anytime soon. It's not going to make you wealth, but Lockheed Martin definitely is going up no matter what. UPS, a little more volatile. Another distribution, defense, industrial play. Actually, this might not be a bad play. Maybe the weakness is over in UPS. I think they're being disrupted by Amazon though. They're being disrupted a little bit, so we'll see. But yeah, I like that. That could be a bearish flag. Also breaks to the downside. Obviously, do they just have okay? They just had earnings, so we'll see how this plays out. It's either going up or down. UPS doesn't look bad. Seamless. Oh, Seam USDT on Coinbase. Aave lending program on Base Chain. Okay. FDX. We'll look at that. This is FedEx, not really interested. Caterpillar. I mean, Caterpillar, if it does come down, I actually might own some Caterpillar. If it comes down far enough, we'll see. This is another industrial play. Basically, you're playing government spending here. John Deere, government spending play. We'll see how those play out. Seam protocol. All right. Seam is what? Seam USDT. Is this it? On Tether? Are we looking at on Tether? Yeah, I don't know. I don't know much about Seam. I mean, why not go with Aave? And the reason I say that because the price action looks weird. I mean, I don't like that, right? That must be a tiny market cap. It looks funny. And sometimes it's better to just stay simple, especially with crypto. Just keep it simple. Maybe you allocate a small portion to Seam protocol. That could be a good play. But if you're going off Aave, why not just go with Aave, right? Why not just go with Aave? Let's pull up Aave. Oh, Aave broke that uptrend. So Aave does look like trash right now. It looks like it's going to roll over again. I'd be a buyer of Aave though. They're using Chainlink CCIP. I guess we'll just roll into crypto. Bitcoin looks extremely bullish here. Holding anchored VWAP, right? We are holding anchored VWAP from that last low. From that 40,000 pullback. What do we go up to? We went to 49. We went to 50K, had a pullback. Supported around 38K. We're holding that anchored VWAP from that point. We are also still in the uptrend for crypto. I'm going to go over this tomorrow. We're still going to go over this tomorrow. But look at that nice uptrend for Bitcoin. Still holding uptrend. Okay, we did last cycle, 2 cycles ago, we did a 30x. We did a 6.5x on this cycle, but like 650%. Now, and this is after the halvening, not from the lows, after the halvening. So we just had the halvening, last week, or really Saturday. So at this point, let's say we just did a double, right? A 2x puts us at 130K. It's possible we reach that by the end of the year. I say next year, spring, we're at 150, 160K. And I think we can go as high as 200K on this cycle. Just because there's so much demand coming in and you're at the beginning of a macro cycle and you're at the beginning of a liquidity cycle. You have a lot of variables lining up. You're at the beginning of an election cycle. So all these macro indicators or variables are coming into play while Bitcoin is heading into the most bullish period of its cycle. Yeah. Ethereum obviously probably outpaces Bitcoin. ETH to BTC still struggling here, but it's not altcoin season yet. This summer, I think we jump. June is the season for crypto. I think it's going to be June. 2 months after the supply cuts in half, typically, nobody sells anymore. They stop selling. Selling pressure goes down, buying pressure picks up. Go much higher from there. And then my favorite play, obviously Chainlink with the uptrend. Well, I mean, it broke the other uptrend. Now I'm just pulling it from the big breakout in September 2023. Now we're in this bigger upside trend. We've got to break this trend. We'll break it. Risk reward is whatever, but we'll see how this plays out. I think we go to 100, 150, possibly 200 for Chainlink. Could be even higher because this is where Web3 is being built. This is what connects all blockchains. They're going to be collecting fees into the future. They're going to have a revenue. You can look at the revenue on Dune. The revenues are picking up. And as long as Ethereum, as long as Ethereum gets bigger, more transactions, well, so does Chainlink. And Chainlink's a $10 billion, $8 billion, asset, where Ethereum's at $350 billion asset. So who has the most upside? Chainlink, right? Chainlink has more upside as far as market cap. And I think there's a chance that it can be as large as Ethereum. A lot of people might disagree, right? Now, so yeah, this is crypto. I'm not really looking at anything else. There's a lot of stuff out there, but at the end of the day, we're in the golden period for crypto. We're in the golden period for crypto, in my view. Let's go back to S&P really quick. So let's talk about an iron condor. What is an iron condor? I'm just going to do a quick review on the iron condor. This is what I've been looking at. And I might start trading this. So for the iron condor, what I usually do here, actually, let's go to /EX. Oh, no. Because I don't want to mess this up. Let's go to we either go to SPX or we go to futures. Ooh, futures move. Oh yeah, futures are going to move a lot faster. So for the iron condor, what you're doing here, okay, small little lesson. All you're doing is looking for what you're doing is you're picking a time that the S&P an expiry date. So let's say you do 7 days, 2 days, 3 days, whatever it is. I'm going to try these 1 day options, right? But you kind of have to be able to day trade this on your account. You could do 2 days out, you could do 3 days out, whatever. But all you're doing is saying, hey, the S&P will not cross above this period by the end of the day, right? And it won't go below this at the end of the day. And that's all you're betting on for the iron condor. You're betting that S&P does not cross these lines by the end of the day or by the end of the week or whatever time period that you actually pick. So what you're doing here, let's see if I can draw this up. Okay. What you're doing is you're going to sell a call at the level that you believe price will not get above. You're selling a call. Sell, call, right? You're selling a call here. That's going to cap your gains. You don't want price to get above that. You lose money. On the downside, you're selling a put. Sell, put. Okay, you're going to sell put down here. You're capping the downs, or you're capping the middle. So you want price to stay in the middle. That's all you're trying to do. Keep the price in the middle, right? You can't control the price, but you're betting that it doesn't infiltrate one of these. Now, to protect yourself in case it does, because you'll have maximum losses if it gets above. You sold a call here. You buy a call right above it. You buy a call. What do you do on this side? You buy a put, right? You buy a put. So this is where you protect yourself. You cap your losses if it does happen to go. So, and also the bigger the range, the less reward you get, the safer, obviously. The closer the range, the more reward. And, the less risk you take. The more risk you take if it's closer. So that's all you're doing here. Now, maybe I'll do it I'm probably going to do it some other day. I'm still developing this. I'll show you on Robinhood how it looks. But you buy one call above this call. So you sell a call, you buy the call right above the strike or 2 strikes above it. Same thing here. You sell a call. You sell a put, right? You cap your gains, and then you buy a put to protect yourself in case it gets infiltrated. And then you collect the premium. You're getting premium from the sold call. You're getting premium from the sold put. And obviously this is going to be cheaper. The buy call, the buy put are going to be cheaper than the sold calls and the sold put, which means you collect the spread. You're collecting the spread between the two. And that's all it is, right? It's pretty simple. Now, picking your spots is where you got to be more strategic. And right now, if we go to SPY, I do not want to do any, I do not want to do this because things are too volatile. During earnings season, you don't want to try this because you can get big upside moves in after hours, right? So for SPY, let's say I sold the, for instance, if this is resistance 506, you might want to sell the 507, and that's not going to work today because it's gapping up, but you want to sell the 507 calls right here. And then you say, oh, this is support. All right, I'm going to sell the 497 puts. Now you have about $10 of room, right, for the stock to move. You have about $10 a move to the 10, well, not 10 to the upside. You have 7, but you're playing 507 to 497. That's $10 in between. You just want it to, to finish or close the day between this spot. And if it's a daily, I mean, you can guess it, but what you want to know is the ATR. What is the ATR? If the ATR is, $5, then you're kind of risking yourself here, because if it starts at 504, the ATR says it should, end around 509. So maybe you want to push that iron condor, that range a little higher, right? You're just creating a range by selling options, and then you're protecting yourself by buying options above that range on both sides. That's how you play it. Anyways, this is not option strategy. Just wanted to show that to some people who might be interested. And I'll be looking into this, probably making a post on the email. Probably do email post on it. Probably throw some stuff out there. And it's easy. You just sit back and relax, and then you exit if you need to exit. Yeah, that's all we have. Anyways, look, earnings are strong. Things are looking well. Do you guys have any questions, any concerns? Tomorrow is going to be a big presentation, right? We're going to talk about the biggest macro trade Friday. If not, I'll move it to Monday. We'll see. I know I'm off, but it's going to be either Monday or it's going to be on Friday. I want to do it tomorrow, so you have, time to actually throw out the clips on the weekend. But yeah, I think that's the real thing. Now, the opportunity here is, what if you can make option plays here and, have some fixed income if you do it correctly. And then in the long term, you're benefiting, you're getting 10x returns on crypto. That's kind of the play here. That's the strategy. 10x returns on crypto over the cycle, in the middle of the cycle. And then when crypto has the bad time, you're out. You're out of crypto, right? You get out of crypto when it's time to get out. And then you have more cash to make fixed income. Maybe you go buy a property, have some more fixed income. That's kind of the strategy I'm aiming for here. Do I know everything? No, but I'm trying to figure it out myself, right? As much as I possibly can, and push over that information and that knowledge. So we'll see. I expect the dollar tomorrow. We'll see. Actually, no, it's not the dollar. Let's look at the data we got to see tomorrow. What's our macro data? What is our macro data? Let's jump over to that. All right. So earnings can definitely be reversed if we have bad data. And tomorrow's data, tomorrow morning, let's just go to the calendar. PCE didn't look so good on this one. But anyways, we're looking at core PCE month over month. Expectations on a month over month basis are 0.3, or 0.3 for March. March could be still hot, right? It still could be a little hot, but we'll see. Shelter prices the shelter input in PCE is much lower than CPI. So it could be, I don't think it's going to be that hot. Also PCE, what is this? PCE regular, same thing there. Core year over year. This is the real I think this is the monster right here. Core on a year over year basis, because we're looking at the trend, not 1 month, but we're looking at the trend. Obviously, the trend is lower, which is why the Fed can still cut rates. The trend is still lower. March expectation is 2.6. If we come in line, bullish, right? We fell. So we're looking for a 2.6. Anything above 2.6, not good. Definitely not good. But 2.6 and below, Very bullish for markets. We could be reaccelerating because earnings are looking pretty good at this point. And if your expectation is that inflation is coming down, more profit margins. If your expectation is that profits are going up, more profit margins, period. Yeah. And then obviously the Michigan expectations come in a little later. We want to see what the participants are expecting going forward. Current conditions. Let's see what the long-term conditions are. 3%. So the market is expecting 3.1% forward looking. And maybe the Fed doesn't get to target this year. They probably don't. I mean, I don't think anybody believes they're getting into 2% unless there's a big recession. 5 year. Okay, yeah, 5 year. 5 years just under 3. 5 years just under 3 or at 3. It was at 2.8 in March, so yeah, we'll see how that is. But it's all about expectations. Expectations, if they get better, then markets start to recover, and they're already recovering off earnings. And we'll see how that plays out. Anyways, yeah, you guys stay blessed, eat healthy, stay, keep learning something new, lift weights, get strong. And we'll be back tomorrow to go over PCE, the Fed's preferred inflation gauge. Let's see what the market's talking about. Let's see what the analysts are saying. And let's see if inflation expectations change. If they do, hopefully it's not to the upside, right? Hopefully it's not to the upside, or hopefully it's not to the upside. If it's not, then expect a recovery. I like AMD. I like Tesla. I like crypto, obviously. And let's get it. I'll see you guys tomorrow. Thank you.